LiteFinance, the world of financial freedom.
Good morning, guys. We have Monday, December the 20th. Let's start the market forecast. So this week will be a bit shorter because of the holidays on Friday. We have Christmas in many countries, and therefore the volatility should be much lower on that day. But we will get some juicy numbers anyway. So the events worth mentioning are starting on Tuesday, which is the RBA meeting minutes, retail sales from the UK and Canada. In the evening, Bank of Japan monetary policy statement. On Wednesday, GDP numbers from the UK and consumer confidence. Existing home sales from the US as well as crude oil inventories. On Thursday, which will be the last full trading day, we will get core durable goods orders, initial jobless claims and new home sales from the US and GDP numbers from Canada. We need also briefly summarize what we know after the last week with the central banks. So, as for the Bank of England, we got a rate hike. As we did talk about that, it might happen in previous weeks, since the latest comments were a bit hawkish, and surely they gave us enough signals to prepare for such a scenario. This decision eventually would mean that the pound could potentially get stronger in the next couple weeks. Although the economy is not in the best shape, and we see that initially the pound got stronger, but those gains were immediately rejected. The currency pair where I would look for the pound getting upper hand is with the CAD, because the Canadian dollar is weakening. And the same situation I would bet along with the Euro-CAD currency pair. Price didn't make even 50% of the retracement from the last highs, so there is a place for growth on those pairs. We are at strong resistances, and it might be a good idea to go long on those. The ECB was very dovish in their statement, saying that most likely there will be no rate hike in 2022. And despite that the euro is on the rise right now, I think it might be a good idea because inflation can be cured with a rate hike. The reason for higher prices are broken supply chains, and until those will not be repaired, the prices will continue to rise. You can check the charts of interest rates in the US and the inflation chart from 30 to 40 years time frame, and you will see no correlation. Inflation rose when the interest rates were high, and it was falling when interest rates were low. So in summary, I will be watching those two pairs and also AUD CAD, because we received a signal from the strategy with indicators. CCI went down to minus 100, and the moving averages are still showing an uptrend. Okay, that will be all from my side. Thanks for watching, and till next time, guys. Bye.